Good afternoon, everyone, and welcome to PBA at noon. I'm Paul Benwell, and I'm joined by my colleague, Sophie Caesar. As the world looks to add electric vehicles to the transportation mix to reduce air pollution, the demand for battery metals increases. And nickel is one of these battery metals in demand, and there are few new high-quality development projects ready to meet this demand. Tartisan is well positioned to be in this battery market through its projects and investment. With us today is Mark Appleby, President and CEO. So Mark, whenever you're ready, you can hop on and start the presentation, and we will have questions for you at the end. Thanks, Mark. Take care.
Thank you, Paul. To start, just want to thank Paul and Sophie for putting this on for us today. And thank all of you attendees for wanting to learn more about Tartisan Nickel Corp. We'll get right into the presentation. It's going to be about 15 minutes, and then hopefully we can get into some Q&A. So, one moment. For some reason, I'm frozen. Okay. So, just standard disclaimer, but listed on the CSE, share symbol TN. We're a Class 1 nickel company with our flagship project being in Kenora, Ontario, called the Cambridge Nickel Deposit. It has a compliant mineral resource estimate, which indicates 117 million pounds of nickel, 66 million pounds of copper, average grade roughly 0.67. Located close by the Rainy River project, which some of you may be familiar with. They're going into production. We're some 80 kilometers away, 7 kilometers from the Mayburn mine, and very good First Nations understandings that we have right now. We're part of Treaty Number 3. We've signed an MOU, and we'll be engaging with them as we unfold our mineral mining exploration over the next coming months here. So the Cambridge proper is on this trend. You can see the little red stars, which indicate other known deposits in the area, and of course, Cambridge being the sort of more rectangular in the middle here with the large red star, that indicating essentially where the shaft is and where the deposit is. Here we are, an overhead view. You can see on the left of your screen here the camp that's a short walk to the actual site. And when I say short walk, it's less than 5 minutes. So camp being in this area, existing 622 meter shaft here, and very little overburden, and you can see massive sulfides exposed at surface. Interestingly enough, that this project sort of is unique in that there isn't a great deal of overburden, and we are sort of a self-contained project in that, camp is already built. The shaft is there. We actually have solar and hydro power at the camp, and we have a crew there now who's actually opening up the camp. They've taken the road in. We've had a Beaver aircraft land on Monday, bringing in supplies as we get ready to ramp up. There's a mineral resource estimate that was published in September 2020. So we are a compliant resource company. I would let you all sort of get in and delve in and read some of it yourself. There's certainly links on our website, but it calls for sort of an open pitable situation, and P&E weighed in and said that we are an economic with a company that has great potential. They had made a number of recommendations, which we'll get into here shortly. This slide represents the block model. The squiggly line at the top indicates where the open pit would be. The straight line down the middle represents the 622 meter shaft, and the various colorations here indicate the cutoff grades. The pinkier stuff that you see here are these gabbro nickel sulfide lenses that you can see that by the plunge here that that it all sort of trends in this sort of north towards the north at depth, and these are all wide open. You can see some decent grades, 2.95% nickel over 21.5 meters. You've got some interesting grades here at depth of 4.25% over 3 meters. Again, very interesting in that the gray area doesn't represent that there is no mineralization. It just means there needs to be more drilling in this area. And drilling in this area is what we will be doing. Just below this 2.95% number, we are going to be putting some drill holes in our upcoming program. So 100-meter odd spacings. Some of these holes would be upwards of 1,000 meters. And the drill program that we're going to outline is going to be starting off with roughly 10,000 meters. The deposit is open at depth and along strike. These areas that plunge here certainly would be followed up on, and the higher grade at depth would also be followed up in the sort of first pass Tartisan drill program. This slide here sort of represents an east to west look heading towards, so on the left of your screen, heading towards Lynn Lake. You can see the Ken Bridge superimposed within the other ore bodies. And really the point of all of this is that we have the sort of same width and breadth and depth as other folks in our neighborhood. And we are, we're right there. So there's definitely a significant ore body here that we think we can build towards 10 million tons. This slide here represents some geophysics, and the bottom slide here, the bottom picture here representing what we call Ken Bridge proper, the flagship. And this other's where the other one here is another mag, which is roughly 2 kilometers away. And so this representing that north target, and this representing Ken Bridge proper, where the shaft is. So in recent times, recent meaning in the last 90 days, we've undertaken to go through all the geophysics on the property that have been historically done. There's over 12 surveys, and a lot of this wasn't properly looked at. Not so much that that it wasn't worthy of being looked at. It's just that at that point, 2010, 11, the bottom fell out of the nickel space, and Arrow just essentially shut down, Canadian Arrow. So we've now dusted off all of this geophysics, and we're putting them through 2021 software and coming up with some pretty interesting things. These little blue footprints represent what we believe to be targets. They have strong signatures and will be worthy of upcoming follow-up. So let's get into that upcoming follow-up. So what we're going to do here and what we've undertaken, first step being getting the line cutters into the property and opening up the camp. So that has begun. Camp in Ken Bridge, proper Ken Bridge, where the shaft. This representing the north target. This historically has only had one drill hole in it, and again, done many years ago, and just wasn't followed up because of the state of the marketplace. But essentially laying out 48 line kilometers. We have engaged with Crone Geophysics. They're going to be putting together the program, and we'll be getting to work here in the next 45 days or so. Sure, where I'm going this way. Here we go. So, but getting back to the MRE, the mineral resource estimate, essentially P&E mining consultants outlined the next steps, and in consultation with the company, obviously, but we put together a pretty expansive first steps for Tartisan Nickel Corp. So we have now applied for our permits. That by its very nature, we do have an MOU. We have just recently put out a news release whereby we want to update the preliminary economic assessment. We're going to speak to that a little bit more here shortly. And they want us to drill off the property. So we talked briefly about going at depth for that 4.25% intersection was, and in the middle part of the property. So both infill drilling to go sort of this down dip and a long strike is sort of next steps in the Kenbridge North target, and where those geophysics are after interpretation. We're thinking that a drill could be on those targets as well. We of course would want to get all the assays done. We have now identified a drilling company that we'll be bringing in, and we kind of anticipate a late spring drill program. Preliminary budget here, $4.9 million. We had a budget meeting yesterday morning and went through all the numbers, and essentially we will be spending this entire budget. So cost of drilling roughly $200 a meter. There would be the necessary sort of metallurgical testing, geochem, geophysics, and all the various follow-up. One would hope, or we would hope, that once we've started, we could keep the drill program going. There are some logistics, obviously. The northern target might require us actually having to helicopter in a drill to that area, but that's easily done. So here we are, sort of in today's world. Share price today, I think roughly 49.50 cents, but at 9 we had 51 cents. Shares outstanding roughly 105 million, 111 million fully diluted. The warrants that are there represent the probity financing we did in December. They're 60-cent warrants. The options outstanding are 35-cent options to officers, directors, and consultants. The strategic investment holdings. Now, this has been something that has done well for Tartisan over the last 3 to 4 months here. Certainly since last October, a remarkable gain. And depending, obviously, mark to market, where the holdings are, this number fluctuates. I think currently we have in investments in cash a little over $18 million. Looked at it yesterday, we were about 18.5 million. There's $1.5 million of that is now in cash, or I would call short-term investments. Everything that we've undertaken to date has been paid for. Certainly the downstroke with the on the PEA and various other things. So we're in good shape. I just want to touch briefly on the PEA. The PEA is something we found necessary to update, and for a bunch of different reasons. Not the least of which is that it's deemed to be historic, last updated in 2010. We want to bring this to a 2021 standard whereby we put all of the costs into the financial model. We quickly ran the numbers this morning, whereby we put it an 840 nickel price, a 375 copper price, and roughly a 78-cent dollar. On a nickel equivalent basis, Tartisan has measured, indicated, and inferred $1,040,000,000 worth of metals value. When you discount that in today's norms, and you can go and look at other examples, Allen Minerals, for example, you went and discounted us to the 15% range. That implies that we should be valued roughly at $150 million. Tartisan right now has a market cap of roughly 55 million. Seems to me that there's a lot of meat on the bone here, and another reason why the PEA could be helpful in unlocking value for shareholders. We can point towards the pure economics of it, whereby historically we had an 87% recovery rate. We had a net present value of $250 million, and the IRR tumbled out at roughly 30% when we did it yesterday. We're highly leveraged to the price of nickel. Every penny increase in the price of nickel reflects roughly 900,000 and change worth of incremental cash flow value to our model. So you can see that in this trend, and if we've kind of adopted the Morgan Stanley 1-year outlook, whereby they think that nickel's heading to 875. Whether you want to take the bull or a neutral stance, I mean, we're at 840 today. I mean, I subscribe to that, and I think that's something that conservatively will be flushing out here in the PEA, and certainly will be what the next steps of anyone on a bankable feasibility study, would be triggering here. We went through when the PEA would be ready. I mean, we feel that we're in a 90-day process. Once we have that PEA, we would then consider a bankable feasibility study. The bankable feasibility study would take shy of 12 months, would cost an upwards of $3 million. But at that point, you literally would be in production decision mode, and which we feel we already are in. So I think there's a lot to consider here with Tartisan. I think there's a lot of value here, and a significant reason for everyone to consider making Tartisan a piece of your portfolio. So with that, I'll hand it back to you, Paul and Sophie, and I'm open to any questions you may have.
We have quite a few questions. Thank you so much, Mark. It was a great presentation. So we have a question here that was sent in to us. Is Tartisan Corporation actively looking to secure a strategic investment from a potential offtake partner or a major mining company to help assist in the advancing of the Kenbridge deposit towards production?
Good question. Okay, Glencore, we already have an offtake agreement with Glencore at commercial terms. So that doesn't preclude us from talking with anyone else, from seeking investment from anyone else, or putting Glencore in competition. But what it does mean is that Glencore has done the specs on us. They're comfortable with our mineralogy, and yeah, so.
Excellent. What's Tartisan's stake in Eloro?
Eloro. So Tartisan owns shares in Eloro. We also hold a 2% NSR on the La Victoria project. Represents a significant shareholding and value. So we have roughly 3 million shares at the moment, just shy of that. We have been doing some selling into the enthusiasm. We're certainly not here to hurt anyone's market, and I believe that Eloro is sort of ramping you know, they're ramping up. They've got a tiger by the tail at Iska. We also feel that the La Victoria, it sounds like they might be getting into a drill program there this summer, spring, post rainy season. So, you know, with their current market cap, you know, certainly El Oro's had a fantastic run, and, you know, we look forward to their continued success.
Great. We had a question just come in. Is Glencore a shareholder?
No, not that I'm aware of.
Okay. And here's one that we always often get. Does Tartisan Nickel anticipate the need to raise capital via an equity financing sometime in the next 3 to 6 months?
If the market cap warrants it, we certainly would go to the capital markets. We're in good shape now in terms of, you know, we're a debt-free company. There are no earn-in arrangements with anyone. We own everything 100%. So, you know, the significant need for cash, I think, initially can come from our balance sheet. And with a portfolio value of 18 plus million, we certainly have it covered in the short term. One of the benefits of getting in financial partners is getting more eyes on the deal. So, you know, if we were to do a deal with the Echelons or Canacords or whomever of the world, you know, certainly helps bring in added retail eyes and helps propel the story. So, kind of a long-winded answer to your short question.
That was great. Here's a favorite one, and I know it's almost impossible for you. You know, you don't have a crystal ball, but what is your prediction for the share price towards the end of 2021?
I think we go through $1. Yeah, I think we head towards that fair value. The market would react favorably, I believe, to us re-engaging in all activities on the property. It's been a long time since the drill's been there. We will be making multiple announcements over the next 90 days in lead up to the turning of the drills. And I think, you know, all of which will help to show, you know, further show what we have, and certainly expansion of that resource presumably would be, the market would react favorably to all of that. So I think we're through $1 in 2021.
That's phenomenal news. You mentioned not being on the property drilling. Did that have anything to do with COVID? Did that affect you guys?
No, well, really, we were just waiting for the right timing. The market had more eyeballs on the whole nickel space and in clean air and in battery metals as a result of COVID, frankly. So, you know, we do have people on the property now. There are certain, you know, restrictions that you have to adhere to. But I think now the market wants nickel deals. You know, we all go back to the Elon Musk quote, "Please give us more nickel." Well, we're going to be doing that. And we'll be tweeting out to Elon too. Maybe we can get him to be a shareholder.
Yeah, you just need him to tweet about you and that's it. It's through to the moon. What is the planned operating cost for Cambridge?
Okay. Yeah, so our break-even analysis will all be fleshed out within the PEA. Sort of in the base case, you need nickel prices to be roughly around $5 to $5.25 for us to be sort of breaking even. I think what we would do in sort of a separate webinar, once the PEA comes out, we can sort of run you through the spreadsheet.
And break it down.
But so, you know, 8-year life of mine at the moment, I mean, all of these various things would only be enhanced as a result of exploration activities and would be flushed out in the PEA.
Okay, well, we'll look forward to that. We have a question here. What's your competitive advantage over the other Class 1 nickel public companies? Great question.
Yeah, well, it's really, it's a jurisdictional thing. It's a de-risked opportunity. So, you know, I can speak briefly of us versus Talon, for example. I mean, we don't have the permitting issues that Talon would have. Minnesota now is taking a show me approach that whatever they're doing isn't going to hurt their environment. And you actually have to speak to that and point to that in order to get approval, permitting approval. So we've gone through our PEA and sort of run all of this through, and the de-risking of Tartisan to shareholders now as a result of all of this historic work will really be amplified in the next coming months, because we are more readily available to be permitted. We do have the MOU in place in Treaty Number 3 with First Nations. We do have a workforce nearby, whether it be through Dryden, but certainly Rainy River and them opening up. They're having no issues in terms of personnel. We're accessible. There's plenty of water. We know where the tailings are going to be. There's no issues with regards to our tailings. And we've got a camp right there. So, you know, it's really now a matter of flicking the switch and engaging in the ramp up of the work program.
So you mentioned the permitting. Where are you guys involved in that? Have you started those steps? Are you waiting until you've completed the PEA or that you move forward?
Yeah, well, permitting initially has been applied for.
Okay.
We don't need permits on the patents. We need patents on the cells. Permits on the cells. That's whenever you do some of this mechanized work. So yeah, we're engaged with all of that. It's been permitted before. It'll be permitted again here shortly, and would be part of the bankable feasibility study when we get into all of that. I'm making the presumption that we will be making the decision to go forward with all of that. I mean, all economics point to us going forward to this at this time, and certainly the inching up of the nickel price, copper price aids in that decision-making process.
It's very exciting. Paul, I'll hand it over to you. I know you have a couple of questions for Mark.
Yeah, excuse me, Mark. Now, do you think you have enough capital to go all the way to bankability? You know, and I guess the reason I'm asking that question, can you touch on your investments with El Oro and other things? Would that be enough, do you think? Would you liquidate that to pay for it and not come back to the market?
Yeah, well, I think sort of a double-edged sword there. We're certainly wanting to reap the rewards of making these investments, and I think on as El Oro unfolds with their drill program, I mean, we would be inclined to sell a few shares, as if and when needed, and again, without hurting markets, shall we say, our investment in Class 1 nickel and technologies, they're all cashed up and ready to go. They're going to be announcing exploration activities in 2021. We have over 2 million shares of that now. So we certainly would like to take advantage of that. We have a significant investment now in Peruvian metals. They're now, at just shy of 10% of that company. They're now in a sort of a perpetual positive cash flow basis. Despite COVID, they're ramping up activities, increasing capacity to help generate more money. And, again, I think an undervalued company. So I just think we're well positioned right now, and to take advantage of what happens going forward in 2021. Um, we have the cash on hand on our balance sheet and investments now to literally to pay for all 2021. If we start to see our share price increasing here, we'd take a harder look at more of a conventional financing.
Okay.
Certainly, we've been offered more money here, whether it's charitable flow through or flow through in general. Those opportunities have been presented to us. We're kind of biding our time currently, given where we are price wise today.
Now, is there enough historical value on the property or data on the property? Is that what's giving you the focus for new drilling, like to expand your, your resource?
Well, absolutely. There is a three-dimensional model which essentially allows you to spin around the 110,000 meters of historic drilling that's occurred. Certainly the 622-meter shaft, the various levels that are already there and were drilled from historically, I think there's more than ample data to point us to where the next drill holes should be. And through the financial modeling, allows us to guesstimate added tonnage, incremental tonnage in the value proposition. So it's just a need to get at it now.
Are you looking for this to be an open pit mine, and how long do you think you could go open pit before you had to go deeper?
Yeah, I think that's another good question. Certainly the historic PEA called for an open pitable situation. Whether we get into to doing just a complete underground mine, certainly there's more cost, but I think the drilling is going to help allow us to make those decisions. I think the historic PEA called for us to do sort of a blend of the minerals, sort of from the higher grade at depth, while utilizing the easier to reach, the lower cost mining at surface. So I think we're going to sort of stick to that program at the moment, where the historic PEA will flush itself out into the new PEA, and we'll sort of come to that decision when we come to that decision. Good topic for another webinar.
We just had another question from our attendees. There are two historical mines on the property. Is there any plans for drilling gold on those two?
There is something that that popped up when we did one of our surveys. We are going to look at that in the spring, post thawing of the property. It was -40 there the other day, but yeah, we definitely would like to look at all of that more carefully. It has never been looked at, so that to me would just be the cherry on the top. If certainly we could uncover something there.
Great. Well, I've just got one last question. I mean, if you do go open pit, how much infrastructure do you already have on place? And can you drill there all year round?
You can certainly drill there all year round. It's just a matter of mobilizing, and yeah. So yeah, you can drill all year round. We're going to have a drill there, we hope, late May. The reason why late May, it's going to take us that time to get the geophysics done and do the proper interpretation.
Okay.
Obviously, the geophysics are going to be helping us to better pinpoint. We want to do some borehole EM. We are going to be getting into that at this geophysics program.
Excellent. Mark, great presentation, great story. Thanks for the update. You're obviously moving forward at a quicker pace now that, like things are falling into place. You've got the investments going, to help support you through this. So congrats on that. And we will keep everyone posted on what's going on with press releases. Thanks everyone for attending. And again, thanks very much, Mark. Much appreciated.
Well, thank you for hosting, and thank you all attendees. And feel free to reach out if you have some more questions. I'm certainly available through email, or give me a quick call. Thanks again.
You can ask questions through Sophie and I as well, and we can forward them to Mark. All right.
Thank you,
Thanks
everyone.
very much, everyone. Take care.
Thank you.